Attention traders, have you ever made that what looked like a perfect entry only to watch the market stop you out and then reverse exactly where you thought it would? Or have you ever sat there wondering, hey, should I enter now or should I wait? Or am I already too late? Then by the time you finally enter the move, it's already over. The goal is simple. We want to try to find a way of getting in the trade without having issues, right? So today I'm going to show you how a battle-tested process that helps traders to stop chasing candles, eliminate second guessing, and make higher quality entries using the samurai sword strategy. So, we're going to make better decisions with more discipline, with greater consistency, with increased confidence. Okay. So, here's the interesting part. This has nothing to do with finding another indicator, or the biggest mistake here isn't where most traders think it is, or that small adjustment completely changed the way I enter trades. Okay. There's one thing almost every losing trader does before they ever click buy or sell. Now, before we jump in, if you're committed to becoming a disciplined trader instead of an emotional trader, type samurai in the comments below. And if you're watching this because you're serious about improving your trading, type I'm in now. Now, if passing a prop challenge is one of your goals, then go ahead and comment 50,000 or 50K below. So what is your biggest challenge in your trading? Is it entries? Is it assets? Is it discipline? Is it risk management? Tell me below. Many of my future videos will come directly from your comments. So thanks a lot for your help. Okay. Now, before we get started, I know we probably maybe some of us have never met. My name is Dr. Greg McLeod, and I spent 30 years of trading the currency markets, including 10 years as a Wall Street currency analyst and one of the largest forex broker dealers in the world. Today, I teach traders around the world how to simplify trading using the samurai sword strategy. Okay, so in this video today, I'm going to show you why this trade works, how to avoid bad entries, where the safest entries occur, and how to manage the trade, and why patience pays, and specific beats vague. And if you stay to the end, I got a nice gift for you to help you in your trading, because it's our free trading blueprint. So stay to the end. Okay, so here we go. So I got my chart. I'm sharing. This is the Swiss yen. This is the trade that we made during our $50,000 to $50,000 challenge, where I work with traders and help them, let them look over my shoulder at trades. Now, the most important part when mastering the samurai sword strategy is time. Win is very important. Timing is very important. And the first 2 hours of a market open is crucial to trading. So this is the London market, and we're looking at the Swiss franc. This is a 5-minute chart. 5-minute chart. Each bar represents 5 minutes of price action, and you can see that the Swiss franc has been just moving sideways for most of the Asia session, and now we're entering the red area, which is called the pre-market. Many people teach the opening range breakout, but I talk about the pre-market, the 30 minutes before the market actually opens. Okay, so that composes of 6 candles: 1, 2, 3, 4, 5, 6, and 6 times 5 is 30. So we have the top range that we're going to highlight. Our top range is 201.21 on the high, and then we have a low below at 201.12. All right, so that is our range. That's the highest it's been for that 30-minute period, and this is going to project out into the future and provide a level of resistance and support. And the samurai sword this is the handle of the sword. Now the handle is going to extend, the blade is going to extend, and we're going to look for price to either close above 201.21 or a 5-minute close below 201.12. If it crosses above 201.21, it's very simple. We're going to hit a buy. We're going to go long. Long meaning we're going to enter the market buying. And we're going to place our protective stop below at 201.12. Okay, this is a trade that we actually took, and I'll show you the final results of that trade as well. Okay, so again, we must have our support and resistance levels already pre-established, so we can know exactly when to enter the market. So either above or below. If it stays in between, we do nothing. So we're just going to advance bar by bar. And Okay, so we have a new bar, 5-minute bar, right? It's 2:55, 3 o'clock. Boom, we have a closed candle closing below. It got to a low of 201.04 before moving back to 201.12, right? So we're looking at about a from 12 to 21 is 9. This is 9 pips. So our risk is going to be about 9 pips, and we're going to look to try to get 2 or 3 times that amount, right? So in fact, we with our indicator that we actually have our entry. That's our entry. This is your entry, right? We are not looking, there's no second guessing. We pull the trigger on the trade, and we enter with confidence, right? That knowing that typically when prices move outside the range, we will continue to see further movement, right? Momentum will carry. Okay, so let's see. Our next bar is also, negative as well. And let me just go ahead and show you where we actually entered in this trade. I have execution marks set. Okay, so there we go. We're going to the next bar, and that arrow is where we entered. So we missed the first couple of bars, but we're still within the range of our entry zone. We have a specific entry zone. So we entered at 201.12 with a stop loss at 201.22, right? So we have a 9 pip stop loss. So risking 9 pips on this trade, a nine pips of risk. And so with 9 pips, we're looking for 3 times our risk, right? Or times 3, and that's 27, right? So let's see if we get there. And so we have a bar. We don't do anything. We have our stop in place. We have our stop is in place. And so we're not, and once we put this trade on, we're not watching this. We're not playing screen jockey. I went to bed. This was at 3 o'clock in the morning. My trade went off in the Pacific time. It's 3 hours time difference. So it was like midnight my time. I took a shower, went to bed, and left this trade on. Why? Because the worst thing I could do is lose, if I trade a 10K lot, is lose $9. So I can lose $9 on this trade. Okay, I lost $9. Okay. However, if I get 3 times, I'll end up with $27. So let's go ahead and keep going. Okay, price rallied up. I'm asleep. I'm snoring. I'm cutting wood. I'm relaxed. I'm not thinking about this trade, right? I'm letting it play out. And so we have some consolidation, but look, 5 minutes, it's 3:45. And then finally at 4 o'clock, we get this huge drop at 4 a.m., right, to down to 201.01, right? That's probably about 11 pip move right there. And it keeps going. It gets going. I had an alarm set, but I didn't wake up to get that alarm. The alarm was right here. And it just kept falling and falling and falling and falling until finally we got to a level where we took our exit. And I'll show you where we actually took our exit. Okay, so so again we're gaining a lot of pips here, and we got a little bit of retrace, and it kept going. We're at 6 a.m. Okay, we're about 6 hours into this trade, and our actual exit, we should have a blue arrow where we got out of this trade. And price rallied. I mean, that would have been, if I were up at 6 a.m., 7 a.m., been great. Price went back and retouched the samurai sword. Look how big the blade of the sword is. Price rallied up to the sword and bounced off and dropped some more. And kept going sideways. And we were able to exit that trade at 12:58. And then there we go. And that's our exit. Okay. So that's 1 p.m. And in fact, I heard a chirp while I was in the kitchen making lunch. And I didn't even look at the chart. I didn't even trade the session. This is we finally get out of this trade at here. When we got out we got out at the 20076. Okay. So 200. So if we calculate, we put our calculator 20076 minus 20112, right? So we got 36 pips. So 36 pips, that's a pretty good trade, right? So again, we were able to basically put the trade on and allow it to move, and had with that we were able to rest. We're able to not stress about this trade, right? And let me show you the exit there. But it takes a lot of stress because, you know, I do a lot of scalping. You probably know me as a scalper, and you know, getting that fast, quick run pips. However, you know, sometimes you've got other things to do than sit in front of the computer all day, right? So this is you know, so basically to recap, what we do is we, you know, going back to the trade, is we clearly define the range for the first 30 minutes. Now you can do this, you know, maybe London session is too early for you, but there are 4 sessions. There is a Sydney session, which starts about 5 p.m. There's a Tokyo session, there's a London session, and then there's a New York session. The Sydney and Tokyo are kind of close together, so really there's like 3 of them if you can combine the other 2. But you know, what's really cool is that you have 3 windows of opportunity to get into the market. So if you're busy, this is a way of placing these trades, setting them up, and you're going and either it's going to close below the sword or above the sword, and we're able to take action, right? So that's you know, tell me it. You know, hit the like button if this lesson's helping you. What I want you to do is you know, go ahead and click the like button and share and subscribe if this was helpful. That way, it lets me know that you want more videos like this. And if you really do, please subscribe. Remember, the Samurai Sword is great for finding opening range breakout strategies, and is what we use to compound accounts from $50 to $50,000, right? There's no hype, no gambling. And remember to go ahead and click the link in the description or in the comments to get your free trader analysis and other goodies as well. And this is our trade here that we did, and this is right. So just one trade at a time, crafting one trade, precision with the Samurai Sword, and that's how we go ahead and make that money, keeping risk small, right? Risking 9 to make 27. If you have a 3-to-1 risk reward ratio, you don't have to be right that often, okay? In fact, you could be wrong 80% of the time and still make a profit, right? Many of you are wrong 80% of the time now and you don't make a profit. So if you have a high probability system, the high asymmetric trading, where you're risking small to win big, and you can lose more than you actually win, you know, you can have lose more trades than you win and actually make money. That's putting the math. If you want to find out more about that, if you think this is something that might be interesting to you, go ahead and click the link. I'd love to talk to you and share with you in more detail. And I look forward to seeing you. If you like this, type Samurai in the comments, give me a thumbs up, and we'll talk to you in the next video. Thanks so much. Peace and pips.